Well, welcome everybody to this week's edition of my Market Insights. Steven Sitkowski here for those of you that might be new. Certainly happy to have you. I come on every week and share with you thoughts about the market, the things that are moving the market, and try to make it as actionable as possible. It is April the 6th. So, I mean, we are right in the thick of springtime, are we not? Just as a quick reminder, everything that we do here is for educational purposes only. It is not intended as investment advice. And everybody needs to decide on their own, what is appropriate for you, etc. So what's moving the markets? Well, Trump has raised the stakes in Iran. So I'm reading conflicting stories. So presumably there's a potential ceasefire on the table for 45 days. And then I saw something that was posted on X where the president talked about bombing bridges and some other strategic spots. He was very emphatic. Let me just put it that way. And it sounded like a pretty clear threat that if we don't have a deal in place by Tuesday, he is going to wage the next level of war on that country. And I certainly hope it does not come to that. That's not good for anybody. It's not good for the world. And so I'll just leave it at that. My hopes are we get a deal done before it has to escalate to that level. The S&P last week, here's some good news, advanced 3.4%. Ta-da! It's been a very difficult year, but it hasn't been a tragically difficult year for the stock market. I think the S&P now is down for the year between 3 and 4%, which is not too bad given the state of the world. Microsoft's been the worst performing of the Magnificent Seven stocks year to date. I think there's a lot of value in it. I think it's a buy at these prices. And when I pull up the chart, I'll also pull up a chart on Microsoft and show you what I'm talking about. 10-year Treasury trading a bit lower at 4.335%. And by a bit lower, I mean a bit lower. This time last week, it was 4.35%. So down a little bit. Oil prices still elevated. We got to wait and see what happens today and tomorrow. But the price of West Texas Intermediate crude, $111.17 per share. Hard to believe 2 months ago it was at $60. It is almost doubled because of the war. So that's what's moving the markets. I think there's some anticipation that we may get a deal in Iran, but who knows? It was definitely a better week. So if we look at week ending numbers, the only sector that was down was energy because temporarily oil prices had come down. But we compare, materials for the week was up 3%. For the month, that sector was down 5.73%. So everything else was pretty much up across the board. Technology sort of led the charge at 4.66%, and its 1 month return is now down just 3.23%. I think tech is what's going to lead us to the promised land, frankly. I think tech will be the reason that the market will ultimately finish up for the year. Here is market breadth. So, a couple things that we like to look at. Obviously, advancers versus decliners, those were great. On the New York Stock Exchange last week, 2,119 stocks were higher, 703 were lower. But let me tell you what wasn't great. The number of 52-week highs versus 52-week lows. So that is still decidedly bearish. It's even worse on the NASDAQ, which is much more tech focused. 191 stocks hit new highs, 734 hit new lows. So even though there were more issues up than down, when it comes to new highs and new lows, there was no comparison. Percentage of stocks trading above their 50-day moving average, um, that has creeped up. Let me go back to that. Thankfully, we're now at 28%. So we've kind of moved up. Basically, we consider a bullish market when more than 50% of the stocks are trading above their 50 days. We call it 50 at 50. We're a long way away from that. That would bring us into this range. So as you can see, if we kind of draw a line across, you know, this territory up here, that's bullish. There is a huge gap at the moment. So, um, getting better, but we're not there. So this is CapEx spending from the major AI hyperscalers. So we're talking about Alphabet, formerly Google, Amazon, Meta, Microsoft, Oracle, and the spending just keeps on going. Look at the jump from 2025 to 2026 estimates. Then it starts to slow a little bit, but still it's robust. Change in revenues. This is change. These are Russell 3000, which is basically the stock market. Consensus revenue forecasts since March of 2023. What's getting the big boost? Semiconductors. That's the light blue. So there's probably some upside there. The SpaceX hype. So one of the things that I'm concerned about, as are many of my colleagues, and that is the pricing that SpaceX is going to go out at. Now, there's some conversation that they're going to go from a valuation of $2 trillion. That's T, like Tom, not 2 billion, trillion, which would put their PE at somewhere um, in the thousand range. Um, if you're looking at price to sales for 2026, 80. I mean, these are, pardon the pun, astronomical numbers. Um, and I suspect what's going to happen is, it's going to be so highly visible, especially now that we've done the moon launch, right? Assuming that is all successful, fingers crossed for that. All looks good so far. So this will go public probably in June, and investors going to drive the price up out of the box, even though most all the good stuff's already been taken before the public offering. And then you'll probably see a boost in the price for some temporary period of time. And then again, pardon the second pun, you're going to see this stock come back down to earth. It's exactly what I expect is going to happen. So as for me, I'm going to wait a year. That's what I'm going to do. Wait a year, let it do its thing. Or, there's a couple of ETFs out there that have some pre-IPO shares. That might be a decent way to play it. And I'll give you some more intel on that in the future. Software's been struggling. And so that whole sector's been coming down for months and months. And look at right here. look, this is total employment is plunging. Look at when ChatGPT was released. You think that's a coincidence? Nope. We've only seen the beginning of AI's impact on employment. Job market has been pretty darn anemic. Only 260,000 jobs have been added in the last 12 months. Almost all were in healthcare. Um, what does the economy need? About 150,000 new jobs a month. That's sort of considered a nice growth rate. 260,000 for the year, not so much. Fortunately, we're not losing jobs. So it's like the people that have jobs are hanging on to them. Our initial unemployment numbers have been pretty darn steady, but and we're not adding jobs. Largest oil disruption in history because of this war in Iran. 20% of the world's oil has been impacted. Remember the Suez Canal crisis? For those of you that are old enough, it disrupted 9% of the world's crude. Arab oil embargo, 7%. Iranian Revolution in 79, 4%. Gulf War was considered a big deal at the time, 6%. This is 20%. Earnings guidance looking good. So this is a definite positive development. So we're expecting 2026. We're not going to be carried by the Fed, I can tell you that. Interest rates aren't going to get cut anytime soon. So what do we need as a catalyst to make the market go higher? Earnings. And it looks like we're going to get those. Market sentiment has improved just a little bit. It is still below norm. So at this point, 33.6% of independent investors surveyed believe over the next 6 months the market will go higher. 51.4% believe it will go lower. Compared to historical averages, 37.5% bullish, 31% bearish. The fact that 51% believe that the market's going to go lower, that's a huge spike over historical averages. The fear greed index has improved a little bit. A week ago, we were all the way down to 13. Now we're at 21, but we're still in extreme fear, which creates a propensity to sell. Even though the last week was better, and so far today, it's early in the day as I'm recording. Um, the markets are hanging in there. I think they're all just kind of on hold, waiting to see what's going to happen in Iran over the next couple of days. That would seem logical to me for sure. But that has improved a little bit. So the sentiment's improved a little, the fear has gone down a little. All that is subject to change. One announcement can dramatically change it either way. Future of interest rates, we now do not have any interest rate cuts forecast until, well, if we put some of these together, um, until probably 50-50 chance right now, September of 2027. A greater likelihood, not by much, of October. And right now, pretty decisively by December. I remember coming into this year, it was forecasted we were going to get two rate cuts. That's not going to happen. So all of a sudden, we can no longer rely on the Fed to help us. So it's got to be earnings. News of the week that'll be coming out. We've already had the ISM services number, which was a bit of a disappointment. We are expecting 55.4%. Anything above 50 is expansion. We're at 54, so it's not horrible. On Tuesday, I don't see anything there that's going to move the markets. On Wednesday, we'll have the release of the Fed's minutes. There will be no formal announcement or press conference, but the contents of the minutes could be significant. Probably won't be, but could be. Thursday, now it starts to get interesting. We get the personal income numbers coming out, personal spending. We get the PCE, the Personal Consumption Expenditure Index. That is the preferred metrics for the Fed as they look at inflation. So we get the headline number. We will also get the core number and initial jobless claims. So just a whole bunch of announcements on Thursday. That's a day to watch. And then on Friday, we get the Consumer Price Index, CPI coming out. So lots of inflation number due out this week. So by all means, be keeping an eye on that. Those are definite market movers. All right, let's take a look at the charts. Let's start with, since I mentioned Microsoft, and I definitely don't want to forget that. By the way, previously I talked to you about Micron Technology, and look at the comeback that's made. So I identified that as an oversold stock. They had a fantastic quarterly earnings announcement. So no surprise to me that it is up the way that it is. Here's Microsoft. So I'm anticipating this is going to be a low. There's no guarantees on that, but that's right at 356. We are now at 371, so it's moved up 15 points from there, which is not a big move. It does look like it's kind of stalling out again. So it may be a long road back, but I really think at these prices, Microsoft is a very good value. Let's take a look at the S&P 500. So we have crawled back above this level right here that was at 6,500. We're now approaching 6,600. I will say that the market is back when we get above 6,800. So we had been trading between 6,800 and 7,000, and now we dropped way down here to 63.43, right? So we pierced that former support level. Now we're back up above it. So things are definitely looking better, but don't forget it's just been a week and this is definitely a news-driven market. So there you go. Great being with all of you again. I hope you have a fantastic week, and I'll look forward to the next time that we get to spend a little time together. Until then, be safe, be blessed. Bye for now.